Let's say the global financial system collapsed tomorrow. What would still hold value? Not crypto, not stocks, not even cash. For governments around the world, the answer is simple: gold. Believe it or not, countries are quietly hoarding massive amounts of gold, hundreds of billions of dollars worth. But why? In this video, I'll walk you through why countries treat gold like a national treasure, which nations hold the most gold in real dollar value, how gold helps a country survive economic crises, and why this matters to everyday investors like you and me. Stick around. This one's gonna change the way you think about gold. Why do countries hoard gold? To us, gold might seem like a shiny investment or grandma's necklace. But for governments, it's an emergency escape plan. When currencies collapse, when sanctions hit, when trust in the financial system erodes, gold is the one thing that holds up. Here's why gold is a big deal to governments. 1. Gold has zero counterparty risk. Unlike bonds, currencies, or even central bank assets, gold doesn't rely on anyone's promise. There's no issuer to default. It just sits there, holding value. 2. Gold can't be frozen. When Russia was sanctioned in 2022, its foreign reserves abroad were frozen, but its domestically stored gold remained usable. That's power. 3. Gold builds economic credibility. A country with strong gold reserves signals to the world, we've got real assets, we're stable. This boosts confidence in its currency and creditworthiness. Who holds the most gold in 2025 edition? In US dollar. Let's break it down. Top 10 gold-holding nations in the world converted to US dollar value, based on approximately $2,600 per ounce or approximately $83.6 million per metric ton. Rank 1, United States, 8,133.5 tons. Estimated value, $680 billion. Rank 2, Germany, 3,351.5 tons. Estimated value, $280 billion. Rank 3, Italy, 2,451.8 tons. Estimated value, $205 billion. Rank 4, France, 2,437.0 tons, estimated value $204 billion. Rank 5, Russia, 2,335.9 tons, estimated value $195 billion. Rank 6, China, 2,279.6 tons, estimated value $190 billion. Rank 7, Switzerland, 1,040 tons, estimated value $87 billion. Rank 8, India, 876.2 tons, estimated value $73 billion. Rank 9, Japan, 846.0 tons, estimated value $71 billion. And rank 10, Turkey, 615.0 tons, estimated value $51 billion. The US isn't just number one, it holds more than double the next country. But look closer. Germany, France, and Italy also hold huge stashers, dating back to post-World War II. Meanwhile, Russia and China are the quiet gold stackers, buying consistently for the past decade to reduce dependence on the US dollar. How gold helps in an economic crisis? So we get that countries love gold, but how exactly does it help when things go wrong? 1. Inflation shield. Gold usually rises when inflation soars. Example. In just a few years, gold jumped from approximately $1,700 to $2,600 per ounce. That means holding gold preserves purchasing power when fiat money weakens. 2. Currency stabilizer. If a country's currency crashes, like Turkey's lira or Russia's ruble, gold becomes a safety net. It can be used to support the currency or fund essential imports. 3. Geopolitical leverage. Gold can be used as collateral to secure international loans. India literally pledged gold to avoid a debt crisis in the 90s. And unlike digital reserves, gold isn't easy to freeze or block. 4. Final reserve asset. When no one trusts paper money anymore, gold still works. That's why it's been called the currency of last resort. Why you should care. You might be thinking, cool info, but what does this have to do with me? The answer is a lot. Countries treat gold the same way smart investors treat portfolios. They diversify. They reduce exposure to risky currencies. They build in a backup plan for uncertainty. Holding a little gold in your portfolio equals country-level thinking. You don't need to hoard it like the US, but having 5 to 15% of your portfolio in gold, physical, ETFs, etc., can seriously lower risk, especially during inflation or market crashes. Gold is the one asset everyone understands. Doesn't need translation, doesn't depend on algorithms. It's globally recognized and universally trusted. Think of gold not as a flashy relic, but as the ultimate insurance policy. Governments hoard it because they know the system is fragile. Smart investors hold it because they know crises aren't if, they're when. So next time you see gold prices in the news, don't just think bling. Think resilience. And maybe consider adding a bit of that resilience to your own portfolio. Thanks for hanging out with me in this deep dive. If you found it helpful, hit the like button and subscribe. I've got more content coming your way about global economics, smart investing, and future-proof finance.